Mic check and screen share check, please. All right, let's go ahead and get started. This is the nightly strategy podcast for August 4th, 2022. Start with our market health check. And we have a very narrow 5-day range, a little consolidation. Today finished with a doji, right where yesterday closed, right at around 414. Very small 1-day range, very small 5-day range. It's only 1/3 of the 10-day range. We're very close to these two breakout levels, one of which is the top of the dragon, the other is the top of the RL10. So this is really in a giant critical state, ready to break out or to break down. The next upside is not until about 440. You have to go back quite a ways to find any other resistance levels in here. So this is really all new territory right here, that if it can get above 418, and I'll even say 420 as a psychological level, then this has potential for a nice move. There's no reason to sell above 420 unless you start seeing this kind of persistent failure to follow through and a slow decay. So this looks like opportunity to me. This looks like a terrific critical state. We got one more day of tactical trading, though, in this week. So when I put that into context of a Friday, I still look at tomorrow as primarily a day trading day. If we get a nice move up in stocks or ETFs or indexes that were the winners today, then I think I want to keep 20% over the weekend, because this is going to be filled, I think, with some good news. We're not in a shooting war with China. Pelosi, for all her grandstanding, came home. Sort of displaced Ukraine from the news, and there's just nothing going on, and that's good for an upside move. Continuous grinding. So we've got 2 legs in for sure, and tomorrow could be the start of a 3rd leg up, which would get us to, say, 430. So on the way to 430. So I see that as the next possible upside. The 1-day standard places where we might be looking to lock in gains: 1-day low, 2-day low, 5-day low, belly of the dragon. The PSAR doesn't know what all the fuss is about. It's just been good to go. So why not, Looking at the 30-minute chart, this was the move today. Really, this was just a moment of relief, I guess it feels like. I guess you'd have to just say this is just a tiny little range inside this, and no follow-through from yesterday's move up. This is a sideways. Just the fact that it didn't fail, though, is a good thing. And now it doesn't take much to break through this peak at 415.5 to the upside, like we've been talking about. So that feels pretty good. The failure to fail is information. Looking at a very tightly compressed set of index performances today. We'll look at the S&P at minus 0.07, basically flat. Treasuries flat. The Russell down 0.2, Diamonds down 0.24. The Q's up 0.47. Emerging markets were the strongest at 0.7. So all things considered, there's only 0.94% distinction between the highs and lows. That's about as tightly compressed as you could want. Tesla was a nothing today. Kind of just it maintained its pricing around 925. As long as it's above 900, that's a good thing. So that's kind of that. Just a marking time day, just a little relief from all the hype. We don't mind that. Let's look at the underperformers. So if we saw weakness tomorrow, these were the ones that had the weakness today, so we wouldn't be surprised if they sold off. So the S&P was flat. Blockchain at 0.22. A collection here of finance, lumber, and staples between minus 0.3 and 1%. Commercial real estate and blended commodities, 1%. Oil, VIX, marijuana, and energy. Now we're starting to get into some serious pain and suffering, from 2.7 to 3.7. And then all of the cryptos, just banking some profits is what that feels like. Basically down 5% for Bitcoin, Ethereum, and blended large cap crypto, plus oil exploration, leveraging losses in energy. Oil exploration was down 4.5%. No surprise that Devon Energy would be a loser today, minus 4%. Alcoa gives back 1.3%. Rivian, minus 1.1%. PayPal, 0.96% to offset some of the gains of the financial disruptors. And then Apple basically flat. So a range of the usual suspects to be in losing positions. The ones that feel a little odd on that is the lumber and the staples. The fact that these couldn't just mark time today, but they gave back 1%, that's a little troubling. Let's look at the upside now. All right, to the upside. So the S&P was down that 0.07. Real estate, 0.05. Here's the cut line between wins and losses. And so starting with microscopic gains here in materials and the Aussie, basically flat. Consumer discretionary and lithium up 0.4. S&P Tech 0.46. Mexico ARC Innovation and the FANGs up 0.7 to 1.1. So ARC Innovation is still in front of its two benchmarks, the Qs and XLK. So FANGs 1.1. Then we have agriculture above the key price level of 20. ARC Genomics Global Futures of Finance. Then some real winners here today in the 2 to 3% range. Clean Energy, Brazil, Wheaton Precious Metals had a really nice move today. And then XBI recovering from some weakness earlier. That's the S&P Biotech. It's important that was better than ARC Genomics, so it's the sector has the strength and not the stock pickers at ARC. Individual companies that did well. Coinbase, another strong 10% day, but again, this one featured a large gap up and then just pain and suffering all day, and it still finished up plus 10%. So there's still a lot of buying pressure on this thing, but the tactical traders are looking at this as opportunities to just make bank on the resurging interest in crypto and the global financial disruptors. This looks like tactical trading opportunity by the smart money. So Coinbase, to me, is really an intraday trade. Get short on weakness and make your money while the sun is shining on that one. That's how I'm reading that. Meanwhile, Robinhood, little sympathy gains of 5%. Cliff Natural Resources very strong today at 4.8, along with U.S. Steel. So they were quite different. They distinguished themselves from Alcoa. So Cliff and U.S. Steel were nice. Squarespace, 1.85. Microsoft doing slightly better than the market, but not as good as tech. So nothing really to see there. That was just it was marking time, marching in place. All right, let's look at the reports today. We'll start with the sniper trade of the day. This is the early morning session in Cliff. This was just so good. It kept me on the 5 minutes all day today. So here was the close yesterday. We were ready for the metals to continue to march. Here was the opening. It held support really well. About 30 minutes in, it just started breaking out. There's the standard risk box off the bottom. And then just ride the wave. There was a second position possible here and here. Both of those were possible, but I had other positions on, and I was content just to kind of get my stop to no lose in here, and then just ride the PSAR into here. This was a standard K2 that turned out okay, and later on exited over here. So just standard trade. Market was flat, but metals were up, and Cliff and U.S. Steel were better than XLB. So they both got the juice today, and that's your nice intraday move. From 10 to 12, that's a 2-hour trade. And if this is 1R, this is 1, 2, 3, that's +3, and you'll take that every day. Sniper trade of the day. And we've seen the market health check in the 30-minute. So dashboard 1. Volatility just hovering here. That's favoring the long side on the risk on, getting very close to sideways market. Moving from bearish up into sideways. We're still at normal volatility. Still pretty strong on the short term. Longer term still continuing to improve like that. A little bit of warning in the U.S. indexes. Strength in Microsoft, Diamonds, Nike. Weakness in Intel, the energy sector. I would look at Walmart as an opportunity on a max pain. It's got to play catch up. So I would watch Walmart carefully to see if the rotational money is looking at that as an opportunity to buy value, or if that's a sign of a market that is full, there's no buying appetite. So I think Walmart would be an indication there. In the Dow 30, lots of dojis today. A good handful of auto framers that did well. We had 2 breakouts today, one in 3M, one in Microsoft, sort of quietly nudging its way higher. Not much breakout movement here on such a narrow range, low volume day. In the ETFs, also a number of dojis, some dead cat bounce warnings, 2.8 to 1 on Japan, and then oil offering a window of opportunity to buy it on sale, and it actually broke down to a new 10-day low. Strength in here in clean energy and the Qs. Clean energy may be quietly getting things done here at making a 10-day, 1 month, and 3 month breakout, and Brazil quietly showing strength along with gold. So some choices in there. Some surprising, stealthy moves. Not unusual to see more auto framers showing up because of the narrow range. So when you have a 10-day high as the upper target, and today's range was very tightly compressed, with that, the act of compression right there now makes the multiple up to the 10-day high better, and that's why you see a few more auto framers firing today as compared to yesterday. Even though price didn't move, the absence of that volatility is now making those swing trades slightly more attractive. I like Pfizer and Intel for stalking, and I just love Caterpillar, the company. They may be ready. Chevron's close. Has been the strongest energy stock, too. In the squeezes, quite a few squeezes today. That's not surprising at all. And now look at the top four. All of the indexes in the U.S. are at the very peak of squeezing. That's how tightly compressed the range was today. So when you had leg one, pause, leg two, pause, and today finishes in that tiny little quiet doji on low volume, that's like a fireworks that's ready to either break out on Friday to get position for the weekend, or it's going to be some selling pressure to lock in those gains. I just expect tomorrow has to be more volume and volatility than today. So let's see if that starts triggering some momentum trades for one day intraday gains. That's what I'm going to be ready for tomorrow. To the sniper headquarters here for some targets. Quite a few more Godzillas now in the S&P 500. We got two that stand out for large volatility on the 5-day. That's L and MHK. And then two that stand out for large one-day volatility, ALL and BKR. But otherwise, it's the absence of volatility that is the most remarkable. You got all of these things that have been suffering, and yet the 5-day and the one-day volatility is way in decline. That is not an appetite for short selling. That is a market that where the short sellers, I think, are satisfied that they were able to push this thing down over 20%, made their money, and are now looking around for leading contenders or letting the market recover a little bit before they sharpen their knives. So this one is still very tricky in bare normal conditions, but low volatility. That's a recipe for some disaster and some hurt feelings. But meanwhile, the S&P 500 fireworks and popcorns, dominated by the popcorns, where everything is so quiet and unvolatile after large run-ups and extremely quiet compression. Again, that's going to be large run-ups and a very tight range on 5-day and 1-day ranges, just waiting for some prime mover to come in and start pushing those things around. And then in the fence sitters, these are the ones that are right in the middle of that between 0 and 100. Here's your 50-yard line. These are all the ones that on that longer term time frame have really compressed tightly into the middle of the field. Now notice how many of these things have drifted down to the bottom of their 10-day range. So I would be looking for these as like a buy on dip opportunity here on CTRA. There's no panic in that yet, and it has drifted down to the bottom of its range. So that could be a value playing up. Or if we see volatility to the downside, that's the first one where the ice breaks and it starts selling off harshly. CTRA could be very, very interesting tomorrow. There's not even anything exceptional in the quiet ones. They're all quiet on both the 5-day and the 1-day. There's no divergence there. Pretty remarkable. And in the volatiles, you got a couple where you have this combination of 5-day and 1-day volatility, but then you have things like Zebra and AME where it's large 5-day and small 1-day, so a real tight compression, the absence of volatility. CBOE was a great trader intraday today, and I'm looking for that one to continue to rage higher. So that's what we're seeing more of right now. That the big moves are in, and there's only a few that are still very active today. So that's opportunity waiting tomorrow. Here's our sniper stats for the tactical set, and the sniper stats on the basis of the Z5 descending. Only 2 in the really vigorous. So Coinbase is so in play that I think you have to pay attention. That was a 5 sigma move, and it was a huge gap up, and then sold off on a 5 sigma move to the downside, and still finished plus 10%. You want to talk about hard to interpret. No matter where you are in that trade, if you have a directional bias, you can find reasons to believe even more strongly about coin. Like if you believe it's a long-term keeper and you're buying it on discounted sale, then all you can see is the big gap up and the fact that it kept 10%. If you think it's a dead cat bounce, all you can see is the 10% sell-off intraday. There was no conviction for more buying. This was all end of the day filling orders and then selling off inventory. So once again, the minority here would be anybody that does not have a directional bias. And that's where I firmly am. I don't care what it does, and I don't care where it goes. I just think the move is most likely going to be large only because of recent history. And it's still at an extreme sell-off on the longer term. And it's right in the middle of its 10-day range. So this is perfectly placed for big moves tomorrow. So strap in and be ready. Multi-time frame NDX. Still lots of strength. Microsoft, Squarespace, and Cliff. McDonald's is still suffering a little bit here on the short term, but it has lots of long-term goodness baked in. I would still be leaning towards that one for swing trade exploitation. Over in the ETFs, Brazil and tech clearly leading the way here. Healthcare, although it has some short-term weakness, has some long-term resilience. That's kind of a value play and a no-brainer, as do the staples. So what I really like on those is the longer-term support that you see in that area. You know, compare that to the energy sector, which has long-term strength, but has just been getting slaughtered in topping action in the energy sector. That's the difference between healthcare and staples and the much more volatile energy sector. So you need to know that about those, how those sectors behave in different ways. All right, that's everything I want to look at from the daily. Let's go to some sniper trading. This was U.S. Steel. This one sold off, and the first PSAR flip signal is the one I took. And that's so we have this. Oh, and I found on Yahoo Finance you can actually now do the linear regressions 10 and 30, which is nice. There's your 30, and here's your 10. Here's the PSAR flip. There's the standard risk box. And now this is one where if this breaks above that RL10 peak, then this thing has a real chance to go. And again, if that's your one risk, you got 1, 2 to the upside, and that's kind of a no-brainer tactical trade. And that's what works. Right into the PSAR for about 1R. This was not quite as, so that's one risk. That's about 1 and some change. This had not as much strength as CLF, although you'll notice here that it now gives failure to fail and a COTA 2 on the next leg up, which looks like you've got support here and support here, standard entry, standard risk. You're only really going to risk that much, because if this fails a second time, you want to be short on that back to this support level. And then it got well started, and by this time, half an hour later, you just go ahead and lock in. Just lock that in and say, no matter what, I'm getting plus 0.5 on this one. Okay, so U.S. Steel. Cliff we'd already seen. That was the sniper trade of the day on the daily report. So that basically had the same move as U.S. Steel, except this move was much stronger, and the sell-off was less, and the recovery for the COTA 2 was sooner. So all other things being equal for tomorrow, CLF better than X. And part of that is that this is much smaller in market cap, so this can be a little more volatile, and the traders can move it faster than U.S. Steel moves. But they both had nice moves today. Coinbase, pardon me. So this one I was slow to get into. I was waiting for the OR5 to open up. The second 5-minute bar was an inside bar, and then when it third bar, it broke down below the opening range 5, so I'm short, and I'm using $2 on that one. I think the R10 was like $1.30, but $2. I wanted to round that off, and this one worked nice right from the get-go. Now here was the decision point that I made. On this little wiggle and PSAR violation, there was some sideways chop in here, and it wasn't directional. I was content because I had some money in hand on this one. But recognizing the volatility and how much buying pressure there was that pushed this thing higher, I did not want to get a second position in because I didn't want to have two positions on and suddenly eat a bunch of volatility. So I was content with just keeping the one position on from here and then just trying to ride this down. And then just took a standard exit. That's a stop and reverse, because now what I'm thinking is this had all of this time frame in here to fail further and finish closing the gap back to here, but it didn't. So you got a measured low, you got the PSAR flip. I got paid 1, 2, 3, 4, 5. That's a legit target to the upside. And everybody that bought up in here might be interested in buying more and doubling down, because that's what you do, right? No, that's not what you do. But I hope people keep trying that. So I buy the SSC, basically a scratch, little follow through. I like the short on this one because I got the, although this was much less volatile compared to that opening, what I noticed was the high, the lower high, the lower high, a persistent downward bias, breaking below the dragon. So that felt like shorting. Gets a little bit of action, but not as much as I had hoped. So it still retained this move from here was still plus 10%. So this little 1-2 extra R was just felt like a gift, and I am so flat on this one overnight, it'll make your head spin. And there was little in the last hour to change anybody's mind. I think this was just a little bit of unwinding the short positions, or maybe some people buying, hoping for another big gap up tomorrow. I mean, that's not surprising. It's done that 3 days in a row. In each of those days, it could not hold those highs. So, who knows what tomorrow will bring. Here's Wheaton Precious Metals. This was very orderly. Nice little gap up. Here's your OR5. Here's the breakout to the upside. Standard risk box also was near the low of the day. So what's not to love? Missed the second entry and gave back an R. The 1, 2, 3 exit would have been here. In hindsight, that's perfect. This breakthrough, the dragon right here, would have also been better. Either one of those two exits, I think, is to be preferred in a bear normal. But still, 1 and then 2 units of reward. So that's like a +2. But I feel like I gave back, and I know that I gave back too much. Gave back half, and that's 2R that I didn't have to give back. So I actually think I would have been better with this 1, 2, 3 and captured 3 instead of 2. You can feel the Kata 2 coming. Here it is. About another 1R, and that felt like it was done. So the R we gave back, it gave back here for +1. Kind of orderly, and then there was no conviction. So this ends up with a nice move from yesterday's close. So I would not be surprised to see this get some more gains tomorrow. And what you're really looking for is a breakout above this high. It has to get above there to really go. But there's room inside here for an intraday move. Conversely, any breakdown out of this, and it's going to try to come back to that low. So this is a prime trader for tomorrow, Wheaton. Here's Mexico, a frog champion. These are all on the 5s. Here's your OR5. After a nice gap up, the second bar starts taking off, so you just buy it on the breakout. Standard risk. Typical frog champion. Once again, span of control issue and not getting more positions on this one. This was the first hint of locked in and going. Here was another good one. There's another good one. So that's the kind of price move you're looking for that confirms that upward move. So that's 1 unit of risk. 1, 2, 3 on a standard PSAR exit. The 1, 2, 3 exit would have been here at the skin of the dragon. I wouldn't mind you having a rule that said if I'm +4, just put a 1R trailing stop on it, and that still would have gotten you that move there. Now the short standard, that was a second entry short that I missed. I would not be offended by taking that as your exit, and if you had, then re-entering short, or just adding that as a second short. You just got to decide what you're going to do and do it. Standard exit, re-entered short, big payoff. Again, missed that second position. Here's the shelf. Here's the breakdown. There's that little R10 wiggle. So somewhere in there was a legit second position because you're still only at 230 and you still got 90 minutes to realize some more gains. But on the other hand, with the standard exit, you end up not getting any of that anyway. So I was content with one position traded in a more relaxed manner, and that's about 2. So this is about +2. This one is about +1. And this one is 1, 2, 3, +3. So that's about 6 on the table there for Mexico. Notice that's a really good intraday trader on a day when the S&P was hardly moving at all. This was the mover. So the big index guys weren't having much, but the Mexico specialists were. It trades independently from SPY. All right, here's Tesla. I had trouble with Tesla today. This is the OR5 breakout. Instantly fail for half an hour. No conviction. PSAR flip short. Standard risk. It is successful initially right away. Missed the second leg. Oh, yeah. This was span of control. And I was actually surprised by both of these volatilities because the market wasn't really shaky, but this one was. So I just took it as a standard one position kind of day and just followed the signals from PSAR break to PSAR break, capturing 1R. That's a stop and reverse SSC, scratch. And then there was just nothing going on, so I just left it alone. Some of those other peripheral sectors and stocks were working, so it just felt like Tesla was dead money today. XOP, this is the ETF for oil exploration. So oil itself was down. The energy sector was down. This thing opened and started selling off. Here's the OR5. I gave it a risk box, a failure, and finally had to just take it and took the 1-2 exit here to capture 1R. Like getting paid. SSC with the PSAR break, and then immediately failed for 1R. So I'm basically flat. The short continues, front running the collapsing dragon. Get paid about a half an R. SSC, this is not feeling very strong. Happy to just get out of there with my skin. And there was just nothing going on until in the afternoon. I stumbled into there was a run on energy and oil late in the afternoon, so this was an easy way to try to exploit some of that weakness. Failure to follow through, followed by a clear break of the dragon. Standard risk, picked up 2. Last one, this is, I think, Alcoa. PSAR flip, 1R in the usual way. Standard short. This was just failure to follow through to the upside. And ended up grinding for a trade that surprised me, right? So this is your 1R, 1, 2, 3, and never look back. So here was a S10 wiggle that could have been played. Here's another one. There's another one. So there were 3 potential shots, but it was just declining so nicely. I just was happy to ride the escalator down and get off with, +3. So those are the sniper trades of the day. Here is the traders today. This is Eugene. He sees that big gap up and fail. Breaks below the low of the day. He gets that one and just rides it out as it is basically crossing the dragon and a wrist box off the low 2R, and only gave back less than a full R. So that's a very nice ride. And it's still preserved, that plus 10%. So this one's in play again for tomorrow. There's a lot of people that believe in that thing that are sweating bullets already, but are happy to console themselves that, well, it's still finished plus 10, even though they're down 10%. They'll just look at that and say that's a reason to hold it. To me, that's just a reason to trade it. It was up 20%, down 10, and kept 10. All that volatility is just a reason to trade it. I don't care which direction. This is Eugene on PayPal. Some more really good work in here. Collapsing Dragon. Z3 breakout, gets paid. Re-enters on a new low of the day, gets paid. Collapsing Dragon gets paid for 2. Waits for the SSE, kind of a bad fill, but gets paid. So he's bringing in 4.7, just following the rules on an orderly move. 1.5, 1, 1, and 1. And he just used a 1-hour trailing stop. So double plus good. Paul. Whoops. Where are we here? So here's the Treasuries. There was not much follow through on this one today. Yesterday had that nice, great big move, and today nothing. He played like a 1-2-3 reversal, and played for across the dragon, and got paid for 0.9. Re-entry at the new high of the day. Quick exit. That was a potential short. So was that one. That would have paid. The breakout from the dragon, or a 1-2-3, or even this entry doesn't lose money, and then this one pays. So treasuries are in play right now. That does not look like the risk-free rate of return. This looks like guys slinging a lot of money trying to get positioned in here. They're trying to make sense of why was that such a strong move. Don't be surprised to see that one up tomorrow if the S&P shows initial weakness. There's buying pressure in treasuries, and this is an attractive place to buy it just to get it back to 119, right? So, and there's a lot of money anchored to that instrument, so that's going to be watched closely tomorrow. You can be sure. Paul on the Coinbase. He played this one calmly and conservatively. You saw Eugene and I playing these early moves. Paul just waits for a rejection of the breakout and plays the breakdown out of the dragon. Gets paid on a nice leg for 2R. I mean, what do you want? That's what you want. This one rolls over and rejects the PSAR, does a quick scratch, tries the re-entry, and it moves sharply against him. I would just say, hey, look at the time of day on this one. This is not a time to be entering new positions with that so close to the market exit. That's an R we should not have lost, and that would have made today even better. But today was pretty good, Paul. Very good patience, and a clear trading plan is evident from the price action. This is Agnieszka, our intern, and now she's just learning to trade these patterns, so she's aggressive though on the DAX, trading 1 minute. If you're in the sound of my voice, consider the 3 minute. So here's the break, double bottom. The PSAR flip would be right there. That's a little low to get in. gets paid, nice, gets short, and gets paid. So that's pretty nice for 1R for the day. Is this the same one? No, this is the next run. And I really like this work here. This is, she feels the first move up, support, buys it, anchors it in. This was a little slow, and that caused us to be losing that. But if we're that far in the win and you have a doji there, go ahead, get paid. Then you can be short here and get paid. And then this is a beautiful short. So really nice work all the way around. Keep working at your pace. Post a chart a week. Arch, doing better with the, staying out of the chop. So this is good. I like this little Kata 2 with a nice comfortable risk. And I like that you did the 1, 2, 3 and got paid. I like this short with that's like a Kata 2 short, got paid. Here's your SSC flip. I think we waited too long on that one, especially when this fails at the same price level it did before. Your 1, 2, 3 exit would be here instead of here, and so that would have been a little bit better. I like that you stayed out of the chop, and now you're noticing higher lows. That's a good shot, great scratch. This is the next one. Still kind of a Kata 2. But I like that one. And again, get paid on these. Don't lose. Make that a 0.2 in your favor and see how that affects your psychology. But improved work staying out of the chop. So nice work there. And Les bringing home an R. Good scratch. Good scratch. Good minus. Yes, he says, yes, K2, we know. Great one. PSR flip, strong. PSR flip, strong. Nets 1. Bueno, good job. Better Wojcik, much less choppiness. Again, I just got to convince you to stay out of these meetings. It's like somebody's waiting for you to go into the meeting for the move. You were able to sneak one in while you're in the meeting is what that looks like. You got paid, that's good. Got a scratch, got a scratch. At least you're not letting those go into half losses. This one was late to get in, but that's a great re-entry. And then, again, that's almost a reliable indicator. So better on that one. And now Luke. Let's see what we got here. 4 for the day. I like this Kata 2 to the downside that gets paid. PSR flip. Good job. This clears the dragon, gets the second position in. Better job making the second one pay off. A little slow getting short, which cost you a little bit. This one, not much pain. Good scratch, good loss, got paid. Scratch, got paid big. Got paid big. So, way to stay with it. Yeah, that's a tough one. That'll give you some. That'll give you epilepsy if you're not careful. All right, that's everything I got for today. Tomorrow I expect to be a trader's day. It's Friday. We've been banking lots of gains in the broad market. Today was a very small volume and volatility, so tomorrow is setting up for fireworks just before the close. And I expect tomorrow to be a surprisingly large volatility day, so I'll be ready. That's everything we got for today. Take good care, and we shall see you tomorrow.